Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within public company reports. Today we're looking at FST Corp's August 2025 filing, and let's just say they've dropped some interesting numbers, and we're here to see what it all really means. Before we dive in, if you like getting straight answers and seeing beyond the corporate speak, make sure you're subscribed. And hey, our Discord community is growing fast, so join us there too, the link is in the description below. So what's the big deal with this FST Corp filing? Well, they've released their unaudited financial results for the first half of 2025, covering the period up to June 30th. Now, unaudited means they haven't had the full external audit check yet, but it's still the most current snapshot we have of how the company is doing financially. It tells us where FST Corp stands right now. Let's get straight to the numbers, because that's where the real story is. These are the financial statements for the first 6 months of the year ending in June 2025. Think of it as checking the company's health report for the first half of this year. In the statement of operations, we're looking at how the company performed in terms of making money and spending money. This tells us if they are actually profitable. First up, revenues. This is the total amount of money the company brought in from its sales and services. If revenues are going up, it generally means more people are buying what FST Corp offers. Next is the cost of revenues. This is what it costs the company to actually produce and sell its products or services. Think of it as the direct expenses that go into generating those sales. Then we have gross profit. This is simply the revenue minus the cost of revenues. It shows us how much money is left after paying for the direct costs of making and selling what they offer. A growing gross profit is a very good sign. Operating expenses covers everything else the company spends to run its business, like salaries for sales teams, marketing costs, research and development, and the cost of managing the company itself. When you subtract operating expenses from the gross profit, you get income from operations. This is a key number showing how profitable the company is from its core business activities before considering things like interest and taxes. Other income or expense net includes things that aren't directly from selling their main products, like interest earned on investments or paid on loans, or gains and losses from selling assets. This is the profit the company made before paying any of its income taxes. This is the amount set aside for taxes that the company will have to pay to the government. And finally, net income. This is the bottom line, what's left after all expenses, including taxes, have been paid. This is the profit that belongs to the shareholders. Net income per share basic tells us how much profit each individual share of the company's stock earned. This is a widely watched metric for everyday investors. And net income per share diluted is similar, but it takes into account any potential shares that could be created, like from stock options. It gives a more complete picture of earnings on a per share basis. Now let's switch gears and look at the statement of financial position, also known as the balance sheet. This is like a snapshot of the company's assets, liabilities, and owner's equity at a specific point in time. In this case, at the end of those 6 months. Assets are what the company owns, things like cash, money owed by customers, inventory, buildings, and equipment. Current assets are those expected to be converted to cash or used up within a year. Like cash itself, money customers owe them, and inventory they plan to sell soon. Cash and cash equivalents include actual cash on hand and highly liquid investments that can be easily turned into cash. This is the company's immediate financial muscle. Accounts receivable. Net represents the money that customers owe the company for goods or services already delivered. A rising accounts receivable could mean good sales, but if it grows too fast without actual cash coming in, it can be a warning sign. Inventories are the products the company has on hand ready to be sold. Too much inventory can tie up cash and risk becoming obsolete, while too little could mean lost sales opportunities. Total assets is simply the sum of all the assets the company possesses. Liabilities are what the company owes to others, its debts. Current liabilities are debts that are due within a year, like money owed to suppliers or short-term loans. Accounts payable is the money the company owes to its suppliers for goods and services it has received. Total liabilities is the sum of all the company's debts. Shareholders' equity represents the owner's stake in the company. It's what's left over for the owners after all liabilities are subtracted from assets. Total shareholders' equity is the total value of the shareholders' ownership. In this column, total liabilities and shareholders' equity must always equal total assets. It's the fundamental accounting equation. Let's also glance at the cash flow statement. This statement tracks the actual movement of cash into and out of the company. It's crucial because a company can show a profit but still run out of cash if it's not managed effectively. This section shows how much cash the company generated from its normal day-to-day business operations. This is arguably the most important part of the cash flow statement, as it reflects the cash generating power of the core business. This covers cash used for or generated from buying or selling long-term assets like property or equipment, and also investments in other companies. This summarizes cash flows from activities like borrowing money, repaying loans, issuing stock, or paying dividends. This final figure shows the net change in the company's cash balance over the period at. So, looking at these numbers, what's the story for FST Corp? On the surface, FST Corp released its unaudited financial statements for the first half of the year ending June 30, 2025. This filing provides a look at their revenues, costs, profits, assets, liabilities, and cash flow activity during that period. While specific numbers for growth or decline aren't detailed here, this type of report is vital for understanding the company's financial health and operational performance as it navigates the market. Now, let's talk about the implications. This report, even unaudited, gives us a crucial look at FST Corp's financial engine. If revenues are climbing and costs are under control, that's a sign of a healthy business with strong demand for its products or services. On the flip side, if costs are ballooning faster than sales, or if they are not generating enough cash from their operations, it suggests potential challenges ahead. The balance sheet tells us about their financial stability. High debt levels can be a risk, especially if interest rates rise or if earnings falter. Conversely, a strong cash position and manageable debt suggest a more resilient company. From a Warren Buffett perspective, we're looking for companies that are consistently profitable, have a strong balance sheet, and understand their business. For FST Corp, we'd want to see that their reported profits are actually translating into real cash flow from their operations. We'd also want to understand their competitive advantage. What makes customers choose FST Corp over its rivals? Are they innovating? Are they managing their assets efficiently? This filing, while just a mid-year check, is a piece of that puzzle. But whereas rivals, are they innovating? Are they managing their assets efficiently? This filing, while just a mid-year check, is a piece of that puzzle. Is FST Corp on a strong trajectory? That depends on the specific numbers not fully available in this summary. But the foundation of any great company is sound financials. We need to see if their revenue growth is sustainable, if their profit margins are healthy, and if they are managing their debt wisely. The real story will unfold when we see the audited full-year results and can compare these interim numbers to historical trends and industry benchmarks. For now, this sets the stage for understanding FST Corp's performance in 2025. Alright, that's our snapshot of FST Corp's August filing. What are your thoughts on these financial disclosures? Do you think FST Corp is on solid ground or facing headwinds? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth analysis of company reports. And don't forget to join our growing, and we'll see you in the next episode of Corporate Decoder.